Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out, as always, with the S&P 500. Okay, we are down 0.15% for the week. Looks like a topping pattern rolling over to me. So let me zoom in here and you guys can see it. So right there, that green line is the 20-day moving average. That's about the only thing that's catching it right now. After that, we got the 200-day moving average and we got the 50 moving average, this rising blue line right there. We're about to get a golden cross, which is going to be the 50-day moving average crossing above the 200-day moving average, which is pretty much generally a bullish sign. I don't think we can take too much account into this bearish looking bar on Friday. We had a huge amount of volume right there because this was a whole bunch of options expiring on Friday. So that could kind of skew this chart just a little bit. But even besides that, I think it's more likely next week that the S&P 500 goes down, and it will probably be caught by this golden cross and then move it back up to the upside. But my guess for next week is down. Dow Jones Industrial Average is almost exactly flat. It was up 0.02% for the week, so basically flat. We have a whole bunch of resistance to the upside. So we've got the 200-day moving average, the 20-day moving average. Then we kind of have a I probably shouldn't even draw this because it's only 2 points right there. Let me just get rid of that. We have a lot more resistance above it than we have support down below, so I think it is more likely that the Dow Jones is lower next week than higher, and we can see a negative divergence here on the RSI and the MACD, which would indicate that it's more likely to go down than up next week. And gold divided by the Dow Jones Industrial Average. Gold underperformed the Dow Jones by 2% last week, so right now 1 ounce of gold will buy you 8% of 1 share of the Dow Jones Industrial Average. And if we look back in history, I'll take this out to the monthly here, we can see there's been moments in history, this one was back in the 1980s, where you could trade almost 1 ounce of gold for 1 share of the Dow Jones. So as gold investors, we want this chart to go up. And so there is a nice little parallel channel that we found right here, and we're kind of towards the upper end of that. So maybe it's going to come back down and touch it one more time. But once we break out of this parallel here, there's not going to be a whole lot to stop it for quite a ways. So we shall see. And the dollar is up by 0.7% for the week. So last week we thought this was going to go up. It went up a little bit, but not as much as we thought. So I think we still got some more upside in the dollar here. Probably got a little bit more juice in there in the bounce. Overall, long term, I think the dollar is going to be, getting weaker rather than stronger. We have some support at around 98, and then we have some resistance right up here around like 99.50. And also right now, we're basically right on the 20-day moving average. So there is a little bit of resistance there, but I think there's going to be more resistance up at 99.50, which is the 50-day moving average. But, some positive divergence here on the RSI and the MACD, so I think it's more likely next week that this will go up. The Fed had their meeting last week, and they, to no one's surprise, as 99.9% of traders thought, they held rates right where they were, did not move them up, did not move them down. And we also reached another milestone as Americans, so get ready for your golf clap here. Our national debt is now $37 trillion and counting. That is over $323,000 of debt per taxpayer. So for everyone watching this show, this is what you owe. We as Americans love to vote ourselves a whole bunch of really cool benefits with absolutely no way to pay for them. And the U.S. 10-year Treasury is down 0.7%. For the week. Now, Garrett and Michael Oliver had some really good points on the bond market here. And so be sure to check out those interviews that we had last week. Basically, in a nutshell, they're saying that they think that the rates are going to be going higher overall. So, less and less, there's a lot of debt that is due. And in order to entice people to buy that debt, if John Williams is right and inflation is actually 10%, then getting 4.37% is a horrible deal. So as more and more people realize that buying a treasury is, you're not getting ahead, you're actually getting behind and you're losing purchasing power, then they're going to need to increase the interest rates on those so that it becomes, more enticing to buy. And the free market will decide that over time. But yeah, I agree with them. I think in the long run, this chart is going to go up. And the 10-year yield minus the 2-year yield, divided by the 2-year yield, the 10-year outperformed the 2-year by 2.6%. So recession indicator rate here. So basically once we cross the white line and then we start going up, that means that we are in a recession, although the government won't admit it for probably another 12 to 18 months. We are now in stagflation, according to Rick Rule, and I believe him. That means we have slow economic growth, high unemployment, so a lot of people don't have a job, and high inflation. Not great for your average Joe, but an amazing setup for viewers of this channel, because what we're invested in will make a pile of money during a time like that. 1-month treasuries fell by 0.8% from week over week. Your cash is now paying 4.16%, so the breakdown continues. This is only going to go lower as time goes on, so cash is paying less and less, and inflation is going up more and more. And what you want, the whole point of this show, is to have your portfolio outperform inflation. So, inflation is going to be different for everyone. Let's say your inflation is running at 15% clip every year, then you need to make more than 15% every year in your portfolio, or you're basically getting poorer. So how do you do that? Well, we invest in gold and precious metals. That's how we do it, especially gold miners. All right, the U.S. dollar divided by the Canadian dollar. The U.S. dollar outperformed the Canadian dollar by 1.1% last week. So support right down here at 135.45 is kind of where I see it. That also lines up pretty well if we go to the weekly here, and we've got the rising 200 weekly moving average. There's a nice catch last week by DS and Moko. I misspoke, and I wrote this on the chart, so I can't mess it up this time. Chart go up, USD do good. Chart go down, Canadian dollar do good. Okay, there we go. Got that one correct this time, not the other way around. All right, and gold is down 1.9% for the week. So looking pretty interesting here. I thought we had a little bit more upside in gold last week, but didn't happen. But we do have a decent little trend line right here. We need at least 3 points to establish a trend line. We've got we'll call it 3.5. I don't know that this one quite hit it, but pretty close. So on an uptrend right there on the 20-day moving average. The real trend line I think that matters is this one right here. We've got multiple points where it all hits right there. If we break below this thing, I'm going to be questioning the thesis a little bit, but as long as we stay above this upward trend line right here and above the 200-day moving average, I think we're off to the races. I would love to see gold retrace down here to the 200 moving average, because I think it would shake out a lot of weak hands, and then we could buy up some of these gold stocks for super cheap. But I could wish all I want. This is going to do what it's going to do. But I think next week, I think it's more likely to go up than down. I think this little trend line right here will hold. I think that the 20-day moving average will probably hold, and I think we'll end next week higher than we did this week. But we'll see. Last week's guest, Garrett Goggin and Michael Oliver, we basically learned that a lot of funny money out there, a lot of fiat currency, money printer go burr. So, according to both those guys, we got a lot more inflation coming. I totally agree. But, we can make piles of money betting on that. We basically hedge it with gold miners. So next week's interviews, we have two fan favorites. We've got Doomberg, the energy chicken, good old Doomy. He's coming back on the show. So be sure to get your questions in. And you get your questions in by going to the YouTube post tab, and you'll see submit questions for Doomberg. We also have Jordan of Mining Stock Monkey coming back on the show. So we're going to get ready to make some money, people. Submit your questions for both of these fine gentlemen under the post tab, or simply join the free newsletter, and you'll find the link in there. Now, gold divided by the S&P 500, gold underperformed by 1.8%. It looks like gold will probably do better at the beginning of next week. And all I'm doing right here is I'm just kind of like eyeballing that. And as long as that kind of holds right around the 20-day moving average seems to be hitting a lot of stuff so far. As long as that holds right there, I think gold's going to outperform the S&P 500. Middle of the road technicals, this doesn't really tell us a whole lot down here on the RSI and MACD. And this one we got from Michael Oliver last week. This is XAU divided by gold. So the XAU is a whole bunch of gold stocks divided by gold itself. And if we zoom way out here, we put these lines in during the live show. And, you know, this goes back to, when is this? The early 80s, right? You could see that the gold stocks made up about 25% of the price of an ounce of gold. And that just kind of went there. You know, we could say the average, you know, price was around here somewhere between 17.5% and 25%. And now fast forward here into the 2025, and we're sitting at 6%. Okay, so his argument was basically like, if we just get back up here to 17.5, I mean, that is a triple. Okay, so, you know, he sees gold stocks as radically undervalued compared to gold. When you zoom out on the chart of gold here, this is going back to the 70s. If you take it from the mid 80s right here, look at this parabolic move we've had in gold recently. The gold stocks haven't really had that. And he believes there's going to be some major catch up, and I do as well. All right, CEF, this is physical gold and silver on the stock market. So one click of a mouse and you can become a precious metals owner. If you're new to the show, this is where you start to protect your currency. You can think of it as another way to store your cash, okay? This one down 1 3/4% for the week. So I like an entry point right here on kind of this downward sloping red trend line. So maybe it'll get caught here by the 20, maybe it'll get caught here by the 50, but I think this is a decent little trend line right here that hopefully it holds. And that can be your first chance to get some. Yeah. And PHYS, now this is kind of like CEF, except it's only gold and not gold and silver. This is also a great place to start. I moved a lot of these red, yellow, and green lines. So as we go through here, you'll notice that a lot of them moved. That's not an accident. I did that on purpose. Gold and silver have had a nice little run, and we got to move our limit orders up or they're just absolutely never going to hit. So for PHYS, the red line hit back here. I think it'll probably hit again. We've got a new level here at $25, then $24.25, and then $23. And if you're new to the show, basically what it is like this is kind of your dip your toe in the water starter point, right? You set a limit order for $25, and then when that hits, then you got your next limit order down in here, and you buy more at $24.25, and then probably not going to hit $23, right? It's probably not going to get down there, but if it does, that in my mind is a back up the truck moment where, you know, like you buy 10 or 15% here, and then you buy maybe like, you know, 35% here to round out half your position. And if it gets down here, then you basically double down, right? Okay, you get in the black real quick when you do that. So not a recommendation, I'm just telling you what I do. All right, and the GDX is down 4% for the week. So moved these lines again. And we got first limit order at 48, and then the next one at 46, and then 41.50. So I'm pretty optimistic. I think that'll hit. I think it will. I think we're going to get a little bit of a washout. You know, people wrote in and they're like, "Do you see any Black Monday kind of coming in?" There was some other TAs out there that thought it would have happened last week, and I'm not really seeing anything in the charts that would make me think that, but I just have a hard time believing that 20% washout for like Liberation Day was it. But maybe that was the correction we've all been waiting on, and everything's just going to go off to the races. Okay, Ega Beaver wrote in. He said, "Hey, mate, good stuff as always." So the GDX here is going to be shuffling up the deck, so to speak, right? So this is a whole bunch of gold miners in this ETF, and come in September, they're going to be doing a reweighting. So we put that out last week, and he says biggest winners of the GDX reweighting in September is going to be Northern Star, up 1.9%, and then Alamos up 1.1%, and then Pan American Silver up 1.1%, and the top weight Newmont is going to be going down 2.57%, and they're going to lose their largest position to Agnico Eagle and Wheaton Precious, and then also Barrick. So looks like Newmont might get hit in that, and then maybe we're going to make some money here on Pan American Silver, one of our favorite silver miners. All right, and GDXJ, so this is the junior gold miners ETF, is down 5.7% for the week, so move these ones up again. $58 for the first limit order, then $51, and then $43. Yeah, I think this is more likely to go lower next week. Although, you know, when I look at gold, it kind of looks like gold's going to bounce here. So if that happens, I don't think these miners are going to go down. But man, it's strange here because it looks to me like gold here. So this is the gold chart. It looks like gold is going to bounce up. But like when I run through these miners, it looks like they're going to go down. So kind of a neat dichotomy. I'm not sure what the right word is for that. But yeah, it's looking to me like the gold miners are going down and gold is going up, which is a really, really strange setup. All right, this one's down 5.7% for the week. So move these lines up. So take new notes on that. And Franco, Nevada is down 3.5% for the week. And I really like this level right here. I got it at 164. So move these lines up as well. This lines up almost perfectly with a Fibonacci retracement. So we just take the last low to the last high, retrace it right down, boom, right there on 164. And yeah, I think that would create a nice little double bottom here. It would be right on the retracement. I think if you wanted to, buy a call or something for like a short dated option on this around that point, I think that might be an interesting setup and maybe one that I'll take. And Gold Royalty Corporation is up 0.4% for the week. So had a really nice breakout here. This is looking pretty exciting. I don't have any lines on this one drawn. I don't see any buys right here. If anything, you might want to trim your position. Jordan says, hey, Steve, I understand GROY has shot up a lot, reaching a good point to sell. But I also noticed that the price to book value is still incredibly low. What are your thoughts on the value at current prices? I agree. And I was watching this and debating taking profits here. We're way in the black, right? All these buy zones down here, some of them have almost doubled. And I think I'm going to hold on. I made that mistake back here, and then it was just a whole year until we got back up to the same prices. And maybe I'm making that mistake again. But I just see this as like a $5 stock a couple of years from now, and I kind of don't want to handcuff myself with that. But time will tell. We'll see if I'm right or not. I mean, don't be too surprised if you see a down arrow here next week, and I trim 10 or 15% or something like that. Maybe that's probably the prudent thing to do. Rick, I think, gave this one a 5 recently, which means fairly valued. And, all down here, it was a 4, I think a borderline 3 when it got real cheap. So I don't know. I like the projects. They got a lot of stuff in the works. Their cash flow is only going to increase. So there's a lot of tailwinds there. As long as gold continues to go up, this is going to do really, really well. But we'll get an interview with them out at the World Symposium here coming up. Origin Royalties is down 2.2% for the week. So, there is a vote coming out. So make sure that you vote on this. So if you own this one, basically you can Triple Flag Precious Metals is buying out their 1% Anglo Silicon Merlin deposit. And you can either choose to take it as cash, or what you can do is you can get shares in the new Origin 2, the SpinCo, and shares in the Triple Flag Precious Metals. But you need to go on and vote for that. And that deadline is actually Monday. And I think that it closes at like, I don't remember what time it is, New York time on Monday. But you need to get your vote in if you haven't done it already. I actually had to call up Interactive Brokers and my brokerage sites to do that because they didn't it didn't send me a notice to do it or anything. So I had to follow up with them. And then I was on the phone for about an hour to be able to just vote on this. And anyways, I chose to get the shares, if this actually ends up going through, and I think it will. All right. And Barrick Mining, it's not Barrick Gold anymore, Barrick Mining is down 3% for the week. So I get some news kind of came out on this for their Mali asset. I asked Rick, and he said that's about 10% of probably the NPV, the net present value of this company. So it looks like the Mali government is just going to take that mine. So I guess Mark Bristow is pissed off the Mali government, and it looks like they're going to steal that mine that Barrick had out there because they think that he should be paying more taxes than he is. So I don't know. Rick and I talked about that one in the Rural Classroom Plus. That replay is going to be out tomorrow. So stay tuned for that. As far as buy levels, 1775, I like that level a lot. If you're impatient, you could get it up here at the 200-day moving average, which is around 1850. I kind of want to see what happens here with the Mali government because I think once that becomes certain, then you're going to see a re-rating overnight to the downside. All right, and Newmont up 0.6% for the week. So the new lines on this. Now, Michael Oliver said if this one basically closes the month, which is rapidly approaching, above 54 bucks, this one should pretty much be off to the races. So this is the biggest gold miner on the planet as far as market cap. And this is going to be the ones that institutions look at. They're worth, how many billion are they worth now? 64 billion. We'll round up to 65. So this is one that institutions can buy into. They're not going to be buying Origin Royalties or Gold Royalty Corporation. They're going to be buying into Newmont, and once you get big money moving into these things, then these are the ones that can really take it higher. First level, 54, 48.50, and then 43. That was supposed to be 25. Okay. And Agnico Eagle is down 2.8% for the week. So kind of interesting here. Looks like we might go in for, we had a bit of a double top right there, tried to do a triple top and kind of broke right down. So almost a cupish pattern. That's a little bit too much of a V for me. I don't think it's a long enough time period. No, not a long enough time period. Yeah, first limit order I like is 114, then 105, then 95 for that one. But, all these gold stocks just look like they're moving down. And B2 Gold is down 3.5% for the week. So the call option I got on this one going out to 2027 working out really well. I guess I could have sold it up here a couple of weeks ago. I would have made 60%, but I think there's some real tailwinds here for B2 Gold, and I want to be exposed to that in a leveraged fashion. So kind of looking like we're forming out a bit of a bull flag here. So that would be fantastic if we are. So here's the poll, and then there's the flag. The part that I don't like on this is ideally what you want is you want this to be like a 90 degree like that. That would be the most bullish. But we got this one day here, just this outlier right there, Friday the 13th. Ooh, maybe that's why. Where it just kind of shot above that and kind of ruined the pattern. So, I don't know. Not too sure how I feel about that. I hope that's a bull flag, but it's not really looking like it. All right, Equinox Gold is down 6.7% for the week. So absolutely getting washed out. Almost touched within a penny of our first limit order right there at $6. Closed the week at $6.01. So I know a lot of you guys wrote in, like JFK says, your 200-day moving average. I didn't know JFK watched this episode, but apparently he does. Theory on Equinox Gold prompted me to take my first position today. Now we wait. Yes. So it was kind of fighting with this 200-day moving average and then broke right through it. What's happened here is they've bought out the Caliber mining company, and I think what's happening, I'm guessing, is that the Caliber shareholders have been gifted the their shares have been turned into Equinox, and they're like, man, we got a takeover, and so they're selling. So they're selling their Equinox shares. Well, we need to be buying it, right? Like this is how we're going to beat inflation, is we're going to buy this one right here. This is a mid-tier gold producer. So like Newmont was 65 billion assets. This one's 2.7 Okay, so they're kind of a mid-tier producer, right? I think this is going to be the next leg in the gold bull market is going to be these mid-tiers right here, like this one, and G Mining Ventures. And we're getting a gift right here as it's selling off because the deal went through. So set your limit orders, and this should be our next big one. Our real big winner here was Agnico Eagle when we bought back here when it got down to 45 bucks. And then we started selling as it got up to 90 when we got a double. Now this thing is free, right? Now we need to be doing the same thing with Equinox, right? On these pullbacks, which is happening right now, we need to be buying, and then a year and a half from now, when this thing is no longer at $6 and it's up at 12, we'll sell half, have the rest for free, and keep riding it out. But you got to pull the trigger on these pullbacks right here, like JFK just did. And as it gets cheaper, you buy more. Okay? G Mining Ventures, same kind of thing, down 11.4% for the week. So hit our first line right here at 13 bucks. So your limit order hit. Next one is at 11, and the one after that, $9.50. So congrats. I know a lot of you guys were waiting on that one, and it finally hit. So congratulations, you're in. And Rio 2 is down 5.5% for the week. So this is my favorite junior miner. This thing is absolutely killing it. Took a long time, but we're finally in there. Set to have production going in January of 2026. So it's just right around the corner. Only 6 months away, assuming they stay on time and on budget. I've been wanting to get more of this and just haven't really, I just keep ending up moving these lines up and they never get correct back down to the point to where I can get more. I already have a pile of this thing. I think it's 2% of my portfolio, which is kind of crazy considering it's a junior that's not even built yet. Yeah. If it got down to 80 cents right here, I would be a buyer, even though I still have quite a bit. All right, and silver is down 0.9% for the week. So we had a washout here on Friday. So it hit all the way up to $37.40. They got slammed back down to $35.50. So that's this white line right here. That's a pretty decent level of support. Okay, so we got a pretty decent level of support right there at $35.50. And we have even better support around $33. So I think we're probably going down on silver next week. I don't really, it's tough for me to see us staying above this white line next week. Maybe we'll get lucky and we will though, but I think it's more likely than not that we're moving down. And gold divided by silver, so the gold to silver ratio, and gold underperformed silver by 1% this week. It now takes 94 ounces of silver to buy 1 ounce of gold. That is pretty historically cheap. If we go back in history here, it generally takes a lot fewer ounces of silver to buy 1 ounce of gold. We're up towards the upper end of that chart for sure. And PSLV, this is physical silver on the stock market, so kind of like CEF or PHYS. This is how you can buy physical silver on the stock market with a click of a mouse. Red line right here, 11.25, then 10.50, and then $10 for your stink bid. Oh, someone asked what a stink bid is, and that basically means that you don't think it's likely going to get down to that. My odds, I try to find what I think will be a 15% chance of it getting down there. And in my mind, that's a stink bid, which basically means set your limit order for 10 bucks. And if it hits, you're kind of surprised, but you're excited at the same time because it actually got so cheap, you know? That's a stink bid. All right? And that, as far as, that just looks like it's rolling over and going to go down. Maybe I should have put the red line up here around like 11.50 or so, but I think this will get washed out. I think it'll get down to that 11.25. All right, and SIL down 2.5% for the week. Moved it up here. I'm in this one for free now, so I'm pretty biased. But I like the first limit order here at 43 bucks, then $40, and then 36.50. Almost like a little island reversal here. I'm sure that gap is going to get filled right there. So I wouldn't be a buyer now. I would wait for it to come back down for sure. SILJ, same kind of thing, down 2.8% for the week. So I'd really like silver to just get slammed here. You know, we took some profits up here when silver had that nice little run up Now we want it to correct back down and we can rinse and repeat the game again, bought some in here, sold there. Now, as these lines get hit, we'll buy more and then rinse and repeat the game, right? Yeah, so this one looks like it's going down as well. We got this gap right here that is very likely to get filled. Pan American Silver down 1.2% for the week. So, if you want to take profits in this company, I think now's not a terrible time. We're up at the upper end of this channel. I decided not to. I think I'm going to ride this one out, and I like what they're doing. I like that they bought MAG. I think they're going to be a fantastic silver company here, even more so going into the future. But limit orders down right here, right on the 200-day moving average would be about 23, 24 bucks. Limit order at 22.50 and then $19. And copper, paging Dr. Copper is up 0.4% for the week. So probably going up next week. That's a pretty bullish looking bar there. Let me look at the weekly here yeah, that does look like it's going up. Okay. Probably going up next week. It's got the 50-day moving average right on the bottom to support it. It's above the 20-day moving average, so likely going up. And basically the deal with copper is we want to buy this thing on pullback. So whenever this white trend line right here is touched, that tells you, that's kind of your kindergarten method of when to buy. All right, and gold divided by copper is down 2.3% for the week. So gold underperformed copper by 2.3%. Last week it took 717 pounds of copper to buy 1 ounce of gold. This week it takes 700 pounds of copper to buy 1 ounce of gold. Still kind of trading in this bull flag here. So that would indicate to me that it's likely that gold is going to outperform copper by quite a bit. But when it breaks out of this, nobody knows. And COP.U, this is your physical copper on the stock market. That one went up 7.9% for the week. So I had a limit order sell here at $8, and lucky for me, I got another 8 cents squeaked out of it, and it executed at $8.11. So I call this the 14% arbitrage, right, with a little happy face here. So basically buying this on a massive discount. I sold half the position right here at $8.11, and I will sell the remaining half up here at $9 if it ever reaches there. And I'll put in another limit order in here for $7 to basically rinse and repeat that. So I was talking about, if you're a kid and got nothing better to do and want to make some money, this is a pretty easy way to do it because the market cap on this thing is, I think it's like 93 million or something like that. I mean, it's not much, and very little is traded between traders. Most of this is like banks buying this and storing it. And so, there's a little arbitrage here that you can catch in between these two lines, and I just did it. All right, and where are we? COPX, the copper miners ETF, down 2.1% for the week. So this is interesting too. It kind of looks like we're going to have a retrace here in the copper equities, but it looks to me like copper is going to go up. So it's kind of similar to that in gold. But it is above the 200-day moving average, which is good. We're about to get a golden cross here in COPX. I don't know that I would be able to bet that unless we had a massive washout. I like the limit order here at 38.50, 36, and then 32.50 for a stink bid, but my money would be on this going down. Your first level of real support is going to be kind of between $38 and $39. Yeah, I mean, it looks like we got more of a correction coming here. COPJ was the opposite, up 2.2% for the week, so shot up on Friday. But I should probably move these lines up. This is one of those that I should have moved up a little bit more. I had these in since Liberation Day, and I just don't think those are going to get hit again. I think that's highly unlikely. But possible bull flag right here. Okay, so bear with me on this one. We got the pole, okay? And then the flag, and I'm gonna give this one a pass right here. See how that one just went way up and then came down? I'm gonna pretend that doesn't exist, because if we hover over this day, I mean, that's only 30,000 shares. Not a huge amount of volume. This whole assets under management on this thing is only $13 million. So this is probably one guy or one institution taking a position in this thing. So, this thing could break out to the upside, which is kind of odd that you have this one, which is worth like $2 billion, looking like it's going to go down. So I don't know. We'll see. It'll be kind of interesting when I cycle through these here. Yeah, this is going to be a tough one for this week to call. I think copper's generally going up, and then it looks to me like COPX is going to be going down. COPJ, probably a little retrace before we go back up. And Freeport here looks like, ooh, that's a tough one. I'll say down initially next week, but getting caught by the 50-day moving average. So we got limit orders in here at 37.50, 34, and then 27.75. But just getting scooped right here by the 200-day moving average, but it closed below. I guess with the options world and all those things expiring, we can kind of negate a little bit of that right there. But a lot of support around where it is now on Freeport. But I really don't see a buy. See these technicals have just kind of like fallen down. I like it like when they're way down here and way in the dirt, right? Like way down there, RSI 25. That's where I get excited. Okay, and uranium, story of the week. Uranium is up 10.4% for the week, so absolutely shot up. We had the Sprott Physical Uranium Trust is going to buy $200 million worth of uranium and store it. That is going to be fantastic. When we take gold divided by U308, gold underperformed U308 by 11.2%. So fell right out of the sky there. And SRUUF, so this is the Sprott Physical Uranium Trust, is up 6% for the week. So they actually purchased, they haven't, done the full 200 million yet. But they purchased 650,000 pounds of uranium. Now, to put that in perspective, that can power the average size nuclear power plant for about a year and a half, okay? And they took that off the market. It is no longer available to Duke. Sorry, Edison. Sorry, Constellation. You can't have it. You're going to have to go find your own uranium, and it's not going to be this. Unless, of course, you want to pay us, right now it's uranium's trading at $77 a pound. Unless you want to pay us $150 a pound, I would sell it for that. I certainly would. I would sell it at a premium like that right now, right here, today. But we need a large shareholder vote. I think 2/3 of shareholders have to vote on this if we can ever liquidate this and sell it. And I think there will be a day that we will, but that is not today, and that is not anytime soon. The utilities will have the squeeze, and someone ain't going to get their uranium. But, once this price gets up high enough, once this gets up to 100, 120, 150 bucks a pound, we will find more uranium. But, we're a ways away from that. All right, off my soapbox here. Cameco up 2.4% for the week. So move the lines up here. $55 for your first limit order, and then we got 50 for the next one and 44 after that for your stink bid. Just keep stair-stepping higher. Pretty impressive. And URNM is up 4.9% for the week. So I think these uranium equities might be due for a little pullback. They all gapped up right here. URNM looks like it's going to correct on Monday. CCJ looks like it's going to correct on Monday, although it did come back there and fill the gap. Boy, this is a tough one. This is kind of a tough week. Yeah, I think we're probably going to have a little correction here in the uranium equities, but, I would still obey the limit orders. Uranium isn't hated anymore like it was even just a couple of months ago, so we buy the hate and we sell the exuberance, and we're starting to see some rocket ships on Twitter of uranium again. So I don't think now is at all the time to be buying. URNJ is up 6.1% for the week. So still looks like we're due for a pullback. We are above convincingly now. All last week shot up above the 200-day moving average. So that would be amazing if we could just settle here on the 200-day moving average and just kind of grind sideways. We're going to get a golden cross here in some of these uranium equities like within the next couple of weeks, which will be the 50-day moving average crossing above the 200-day. Limit orders for URNJ, 1750, 1550, and 1367. Yes, there is a reason I have it to exact that number. All right, and UROY, Uranium Royalty Corporation, up 0.9% for the week. So moved above the 200-day moving average, convincingly closed on it. Setting up for a golden cross right here. I think this one's probably about fairly valued now. Yeah, so, you could take profits if you want. I know a lot of you guys got in down here around $1.50. So, You are up considerably. Let's see, you are up 55% in a couple months. That's nothing to shake a stick at. If you're a trader, now's the time to push the sell button. We're going to be reviewing some more of these companies in the Rule Classroom. So I'm going to be doing a live stream on Thursday at 12:30 Pacific time, and we're going to go over some more of the companies that are going to be at Rick's Symposium. In the Rule Symposium, we're going to pull them up on the charts, find entry points, and then after that, I'll take any and all questions. So we'll pull up companies and charts of whichever ones you guys want. And this is going to take place, so it'll be this Thursday, 12:30 p.m. Pacific time. I really hope to see you there. It's a lot of fun. I enjoyed doing it. Last time we did it, we had about 250, 300 people in the room, and I was just pulling up charts as quick as I could. Lasted about, I don't know, hour and 15 minutes, something like that. And yeah, it's a lot of fun. So I know you guys, every week I see in the comments, you guys are asking about different companies, and this show would be 2 hours long if I went through all of them, but that's kind of a place there where we can all do it. So hope to see you guys there. Uranium Energy Corporation is up 3.4% for the week. So I don't see any buys now, although we are on top of the 200-day moving average. So that is fantastic. Oh, by the way, the Rule Classroom, there's a link down below if you guys haven't joined. That's where you can go, and it'll also be in the newsletter too. I'll put the link there to where to see it. All right, so we are above the 200-day moving average right now. Hopefully we'll do like I was saying with you, Roy, and just kind of grind sideways on this 200-day moving average before moving higher. But it is fantastic that now we've closed above that and closed the week above it, which is great. URA is up 1.8% for the week. So this is the put that I bought. I contributed to the witching hour here on the options, and this one just completely expired worthless. I bought a put expecting to have a little drawback in uranium, and we got one. I was up 20%, I think, on this day right here in a couple of days, and now that I can see the future, I should have just taken it. Anyways, this thing expired worthless, so I can let this one go. Probably going to retrace next week, so looking like this one's going to come down. All right, and oil, WTI is up 1.2% for the week. And Brent is up 0.9% for the week. So coming up on some resistance here in oil with everything that's going on in the Middle East. We've got a bit of a trend line right here. This will be the fourth point. 1, 2, 3, 4 points right here. Really high RSI in the daily 75, probably going to get a correction. And if we do gold divided by crude oil is down, gold underperformed by 3.1%. Last week, it took 47 barrels of oil to buy 1 ounce of gold. This week, I'm rounding here, it takes 46 barrels to buy 1 ounce of gold. And XLE convincingly above the 200-day moving average. So we'll see how things iron out between Israel and Iran. Hopefully that conflict gets resolved quickly and oil will come back down. I said in the Rule Classroom that I bought a put, basically betting that oil would go down. I misspoke. This is what I did. I bought ERY, which is a 2x inverse to XLE. I held it for 1 day exactly, and I was out real quick. This is not something you want to hold for a long time. There's, what do they call it? Degradation, or it's not theta. It's I forget what it's called. So there's probably like 9 people screaming it right now. Put it down in the show notes or in the comments. But basically every day that you hold this, because this fund rebalances every day, you lose a little money. So you do not want to hold this for a long time. This is a quick bet. If you think oil's going down, then you bet on this and the chart will go up. Anyways, I took a position on Monday and then I realized I was kind of wrong on Tuesday. And so I sold and I lost, what did I lose? 3.7%. So not too bad. But yeah, I still think we have an opportunity here in oil. I think maybe this is just my optimism, but I think that this Middle East conflict is going to get resolved. And I kind of like Bloomberg's idea. You're not going to catch this. You're not going to catch this spike up, but you can almost always be sure that it's going to come back down. And that's basically what you bet. And you make money on it coming back down. So you're essentially betting on peace by buying a put in something. So I'm going to look more into this. I'll talk about it in the newsletter of what I'm going to do. But I expect that next week I'm going to be betting that oil will go down. All right, and XOM is up 2.3% for the week. So this is looking absolutely fantastic. Now, a lot of this run up here is the war premium, but we are up above the 200-day moving average. I don't see any buys right now. I like 108, 103.25, and 100. I've moved these lines up. So be sure to check out our free newsletter. And also, I want to share with you guys, we just started something new here. And here's at the website. This is how you sign up for the newsletter. This is on the homepage, just right there. Join, click, I want to subscribe to your mailing list. It's absolutely free. Ralph says, I very much enjoy your newsletter. Adam also says, I agree. So as the name would suggest, it's free. There's no spam. I'm not going to sell your email to some marketing company or something. It's just you and I. And it comes out once a week at 10 a.m. Pacific time every Sunday. So it's a summary of all our guests that we've had for the week and the links to future guests where you can submit your questions. So link is in the pinned comment below, or simply go to stevebartonmoney.com. Now, what we also have here is we've got a blog. So if you missed an episode and you're like, man, this thing's an hour long, I want to find out what this is and read it in 2 minutes and know exactly what it is. So you go here to the blog, click on it, and you can read a quick summary of what we talked about and what we learned in that episode. A real quick, down and dirty, easy way to do it. So check that out at stevebartonmoney.com. And Chevron is up 2.5% for the week. I still don't see any buys right now. We have not broken through that 200-day moving average like we did on Exxon. Getting really high in the RSI here, 68. So I think we're due for a correction. I like 141 as the starter, and then 135 as your second limit order. And pretty much anything below that is going to be a smoking deal. And Blackstone Minerals down 5.1% for the week. Looks like set your limit orders for $13. I think we got a pretty good chance of that hitting next week. This one right now is paying, I believe, an 11% dividend, somewhere in that ballpark. 11.3% dividend. So get your limit orders in. And natural gas is up 7.4% for the week. Probably down next week. I mean, that's looking like it's going to go down to me. That would be my guess. John says, nice job, Steve, and a big thanks for showing the date of the recording in your background. So if you're ever wondering when we're recording, that calendar right there will tell you. I've only ever forgotten to flip the date once, and it was when I was on a guest as the other one's show. So pretty much take that as gospel. That is the day that it was recorded. He says, with crazy markets and geopolitical volatility, it's important to know the day it was recorded. I agree. That's actually what we call a selfish calendar, because I got so many questions. Like, even when I put the record date down in the show notes, people would always ask me, when was this recorded? I'm like, now I don't have to do that. Best $7 on Amazon I ever spent. All right, Devon Energy down 2.3% for the week. So hit the 200-day moving average, got rejected. Ex-dividend date just showed up here. I thought we'd get more of a correction on that, and we just did not. I think this company is fantastic. I also think it's going to get cheaper. I think it's a deal now, so if you got a 5-year time frame, just click the buy button and then go fishing. But I think it'll probably get down here to $30 again. I like that as a limit order, then $27.50. And Birchcliff Energy just continues to defy gravity, up 3.8% for the week. So just shooting to the moon, looking absolutely fantastic. Canadian natural gas is looking great, but we are at quite a bit of resistance. If you follow that red line across, you can see there is a lot of price action around this level at $5.60. So I would expect a retrace next week. Yeah, I mean, RSI is at 77. They're probably getting a correction, but I thought the same thing last week and I was just wrong. All right, and Pado is down 1.8% for the week, so I thought this one would get a retrace. We finally happened. I like limit orders at $13, then $12, then $10.65. And coal, thermal coal up 4.2% for the week, so still trading at kind of in between this range of 100 and 150, still trading at the bottom third of that range right there. A lot of resistance where it's at right now at 113. Met coal down 0.8% for the week. Same story on this one. A lot of resistance where it's at right now. trading towards the bottom third of that range. Oops, hang on. There we go. This one, 0.8%. Yeah, so I misspoke there. So this one's met coal trading, what is that, like the bottom eighth? Way down there, almost on the floor. I'm thinking the floor is 174 and we're at 179 right now. So met coal is absolutely hated. Might even get cheaper and break that, with a global recession, which looks imminent and likely. Coal, the coal ETF down 0.75%. Still staying above this 50-day moving average. That's just acting as support. And the 20-day moving average, so that's good. So I think now is okay to get a little bit more. See how we're just kind of grinding sideways right here? I think we've kind of found, I'm kind of expecting one more washout like we got on Liberation Day here, so I'm a little hesitant to get more, but I think now is fine. Coal is absolutely hated, and that's generally when we want to buy, or maybe just set a limit order for like 1650 or something like that, just a little bit below where it is now. Glencore down 3.1% for the week, so might be rolling over here, kind of looking like in the RSI and the MACD, like we're going to be rolling over and going down, so we might be getting cheaper here on Glencore. AMR down 5% for the week, so, the one guy back here got it for $100 a share. Maybe set a limit order for $100 a share if you want some met coal. Best met coal miner on the planet, and they're losing money. That's not going to continue forever. And BTU, Peabody, down 1.6% for the week. So this is actually kind of looking the best that I've seen in a while. I mean, other than the psychic day right here, Liberation Day, where you could have got it. Looking like we're kind of grinding out a bottom. I think we do go a little bit lower, but I do like how it looks like we've kind of set a little floor here in BTU around 1350. And platinum is up 4.3% for the week. So best thing for this to do, I think, would be to consolidate sideways. This bull flag played out and just shot to the upside. We're up to $1,264 to close the week. Remember, we're just buying this thing at 900, anytime it hit $900 for 2 years. Now it's finally paying off. Hopefully it stays up there and this isn't just a moment in time. PPLT, the way you can do it with a click of a button on the stock market, up 3% for the week. So I'm not going to move these limit orders right here yet. So 85, 83, and 80. I'm still not convinced that we're convincingly breaking out here in platinum. We're just hitting on where we were 3 years ago, back here in March of 2021. So it's something, but 4 years ago. So it's really good. And I really wouldn't blame anyone for taking profits here, but I'm kind of in this one for doubles and triples. I think that we're going to go considerably higher here in platinum, and I want to play it for that. And Palladium is, I think this one was down. Up 0.8% for the week. So I don't really see any patterns here. Same kind of thing. Buy it around like $900 and do it here on PALL. These are the levels right here, 85, 83, and $80. Didn't have that convincing breakout like we did in platinum. And SPPP, so this one is down 2.8% for the week. This one is about 50% platinum, 50% palladium. This one does look like a pretty convincing breakout right here. Certainly moved past the October 2024 highs. But yeah, like a first limit order at $9.50, then $9, then $8.75. I'm not selling any yet. Although if you want to trim, I don't think now is a terrible time. But again, I'm in this one for doubles and triples. I'm not looking for 30%. Platinum divided by silver, finally looking fantastic. We're above a kilo of silver now, up to 35 ounces of silver for 1 ounce of platinum. And platinum divided by gold, now you can't quite get 3 ounces for 1 ounce of gold, okay? It's 0.37 now. So looking fantastic here. Platinum is way outperforming gold and silver. And nickel is down 0.4% for the week. So dipped just below that 15K floor line that we've been talking about forever. And NIKL, a nickel miners ETF, rolling over right here. Looks like we're going to get the correction. We do have this 200-day moving average to catch it. But that is just a falling RSI and a falling MACD. I think it's more likely than not that we break through that, and then maybe we'll get one more hit in nickel. And Centaurus Metals is down 1.65% for the week. They're going to need to raise another 25 or 30 million to start their next drill program. But it did hit right here on this bottom part of this parallel channel. So I know you guys have been watching that for a while, and it hit right around 22, 23 cents. I think is great for a limit order. So a lot of you guys got in, but they're going to have to dilute here. They'll probably get their money out at the Rule Symposium to do so. That'd be great. So I'd love to see you guys out at the Rule Symposium. If you can't make the the flight and actually go out there, I know a lot of you can, but some of you can't. There's a live stream available, which instead of the ticket being $600, it's I believe 250. And you get 4 days worth of content. So there is a link down below. I would love to see you there. And the Bloomberg, this is looking great, is up 1.4% for the week. So last week I said the resistance level was 107.50, and we got within a nickel of that. We got 107.45 and then got rejected and came right back down. So probably going down a little bit next week. I hope I'm wrong, but I don't think I am. I think we're probably going to get a little bit of a correction here, but yeah, just hit right there and then just bounced right down. But I think it's only a matter of time before this shoots up to the upside on the Bloomberg Commodities Index. Iron ore down 0.6% for the week. So nice little drop here in iron ore. I'm looking at 92 as the next real level of support. We're getting pretty low in the RSI, pretty low in the MACD. Forecasting a recession, just like copper. BHP fell out of bed, down 5% for the week. So much for this inverse head and shoulders that we drew last week. We could just delete that. That did not work out at all. Get rid of that. There we go. Okay, so now we drop through. So your limit order at 48 hit. Now the next one I like is at 44, which I think is likely to hit. And then after that, $40. Okay, so getting pretty low on the RSI, 33 on the daily. Let's see what it is on the weekly. It's got to be getting pretty smoked too. 40. Okay. Yeah, but I think this yellow line is likely to hit. So you got in at 48. Now your next one is going to be 44. And after that, 40. I don't think 40 will hit next week, but who knows? All right, and the PIC ETF. This is the Metals and Mining Producers ETF. One-stop shop for it all. BHP, Rio Tinto, Glencore, your Freeport, make up the majority of this, and like it a lot, especially for retail. If you don't want to follow each one of these companies, just buy this thing. Okay. Anyways, this one is down 2.75% for the week. Nope, I'm sorry. It's down 4.7% for the week. So it broke through this 200-day moving average and then just fell out of bed and came down. Doesn't look like anything's catching it. There is a bit of price action here to the side. I like a limit order at 33, and then your next one down at $30. And Bitcoin, man, when I started recording, it was 102, and now it's 101. Let's see what it is down for the weekly, because this number I have here is no longer any good. Down 4% for the week. So falling. Okay, so if you're curious how I got all these lines on here, go watch the episode last week on Bitcoin, and I'll show you the Fibonacci extensions here. But basically, it's looking to me, especially now, like we're going down here to this next level, which will be like 94, 95,000, maybe 97. But I think it's highly likely that we're going to be breaking this $100,000 level and going down into the mid 90s, 95, 94, 96,000, somewhere in there, probably catching by the 200-day moving average. So pretty exciting there for Bitcoin. So thank you guys for being here. Be sure to sign up for the free newsletter and check out the Rule Classroom and the Rule Classroom Plus. Remember, Thursday, 12:30 Pacific time. I hope to see you out in Boca Raton, if not there in the live stream. And you can also check out this software that you've been watching this whole time. It's called TradingView. It's free, and there's a link down below for that as well. Alrighty, well, go to stevebartonmoney.com for more, and have a wonderful day.